Hello, everyone.
Hello.
You hear me?
Yes,
Yeah.
we hear you. Yeah.
My voice clear? Any background
Yes,
noises?
it's clear. No, no, it's clear.
Yeah. Awesome. Okay, so I'll try to complete everything today by today. Okay, so this is gonna be a very long session, but definitely I'll be giving 10 minutes scrap because we must gonna go through. Okay, what is that? Uh, the 10 minutes break. Yeah, we definitely need to because the session. It's all about the Zoom. Yeah. So now where did I stop? I stopped at the ping pong algorithm, right? Okay. So now I'm gonna be showing you the real examples, okay? The real examples on charts, yeah, how the ping pong algorithm really works. Okay. So now um, so let's say I'm here. Let's say I'm here, right? So now basically how I was trading earlier by using this ping pong algorithm was like this. Yeah, I will mark my strong highs, yeah, a break of structure at the body here, and I will mark my weak lows from here, sweep of liquidity, and I'll mark my break of structure like this. Yeah. Now this is our strong high, this is our weak low, and I will mark the internal range liquidity. What is internal range liquidity? And internal range liquidity is all the swing points inside the trading range. Okay, a trading range. Let me barely play it here. Okay, a trading range is basically from this high to this low. So now every swing point inside this is what we call it as a internal range liquidity. Now, do we have any swing points here? Yes, we do. This is the only swing point inside the trading range because after this break, this becomes our weak low. Before that, there is no trading range. After the trading range, now this is after the trading range, this is the only internal range liquidity we have. Okay, so we will look for entries above the internal range liquidity. Okay, so at every swing point, people would be investing their money. Okay, so now also this is the trap. Okay, the internal range liquidity or trap, you can call whatever you want. Smart money trap. Can you be able to see that there? Smart money trap. We have liquidity. People call this as liquidity. Let me show it more clearly on the 5 minutes time frame here. Okay, now it's clean. Now you see, this is a clear order block. This is a trap. We have the liquidity that people use, smart money liquidity here. And then this is the point of interest. You see the rejection here. People wait for confirmations and they will enter here and they got stopped at boom. Yeah. So now this on the 15 minutes time frame, this is the internal range liquidity. So I need to look for entries above the internal range liquidity. So once all the internal range liquidity got clear, price will pull down. It clear the internal range liquidity and price pushes down. Okay, so this is how the algorithm works. Okay, so if I go to the 5 minutes time frame here, now this is our strong high. Okay, this is our strong high. I'm not talking about the ping pong algorithm entries. I'm showing you how this works. Okay, how the real algorithm work. Okay, so now this is our strong high, sweep of liquidity, break of structure. Let's wait for a weak low to get formed. Now this is our weak low, right? So now everything inside the trading range is internal range liquidity. Now where is the last swing point? This is the last swing point. That's not the equal high. You see, the middle wick is bigger than the left and the right wick. Okay, so now that's the internal range liquidity. So once price takes off the internal range liquidity, we'll look for entries above that. And free stop loss at the imbalance. Yeah, 2.6%. That's how we trade. Okay, so that's how it works. That's how price works. So basically, yeah, the
Oh,
algorithm works.
mm,
Yes.
sorry.
What is it?
Do you consider inside bars as a confirmation for pointing out the low, the range? If
Oh, what do you mean by inside bars?
so, for example, in this situation, in this example, if that candle that you mark up for
Can you
confirmation of
annotate
the
annotate
low,
on my screen, please? You can annotate on my
uh,
screen.
how should I do it? Uh,
Okay, on the menu you can find annotate option.
ah, this one.
Which one?
Yes.
Oh, I got it. Yeah,
And
yeah, yeah. You see here,
this was
this is
yeah,
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 yeah, I got you. Okay, okay. I got you. Just take off the annotation, please. Just click on delete.
okay.
Okay. So now
I
you
don't
see,
know.
you don't. Yeah, it's good. Okay. So now you see here, this is our strong high, and how do I consider the weak low? I need to see a swing point getting broken, a three candle formation. Okay, you see a middle candle wick is bigger, left and right candle wick is lower. Now this is a swing point, right? So I need to see the swing point getting broken by a body. This is a wick rejection, and this is a break. This break, body break, confirms the break of structure of the weak low. Okay, once this happen, we have a trading range from this high to this low. Once the trading range has been formed, every swing point inside the trading range is considered as an internal range liquidity. Okay? So now you see, is this a swing point? No. Why? Because we don't have anything on the right side, on the left side. Is this a swing point? Yes. That's the last swing point. Left side, wick is low, right side, wick is low. I'll show you here. See that? Left, right, low. Yeah. So the last swing point inside the I told you price will come to take all the internal range liquidity. Sometimes it won't take all the internal range liquidity. Okay. So now it depends. It depends on the price action. It depends on how the price is forming and where the liquidity is. Okay. So now the trap, where is the actual trap? Even if it is, what is that? Even if it is the internal range liquidity, where is the actual trap? This is the actual smart money point of interest. All right. So now price take the internal range liquidity. It gives you nice reactions, but this is the actual trap, right? So where people will enter, people will refine this POI like this to this big, yeah, and they will try to enter. Am I right or not? Yeah,
Yes,
yeah. So now if that is the trap, where do I enter? I will enter above the trap. That's a trap. I give a red line. I will put my stop loss here. Yeah. Let's wait for the trap to get cleared. I'll play this off. You see, until price take all the trap, price won't go low. You see here? Once you enter the correct point of interest, price will quickly gives you the rejection or reaction, whatever you might want to call. Okay, whatever. It's 1.6 pip stop loss. Okay. So now I can target this low easily, right? It's 33R. Yeah. Okay, fine. So now we have a lot of precision just by using the ping pong algorithm. Now you might be asking a question, then why I moved on to Malaysian SNR? Yeah, that might be the question you might be asking yourself. Yeah, the thing is that yeah, even this is a ping pong algorithm with a lot of precisions, a lot of entry opportunities on the lower time frames with very tiny stop losses and stuffs. We need we need to understand a lot of things, right? Even though if I compare myself with my students, I have a lot of experience, but I never ever risk more than 0.25% on my ping pong algorithm trade. I never risk 0.25% more than that because this is based on probabilities, right? So I told you whenever have a week like this, we have a point of interest on the 50%. Yeah. So now the starting of the week is mitigated, but the 50% of the week is not mitigated, right? So price may come to this high. Who knows? It's all about risking. Okay. You need to what is it? Take a risk or lose a chance. Right? That's the thing. Okay. So now I know this is a precision area. Okay. If I get a trade from here, it works. It will definitely work. If I get a rejection, that's it. Price will go down. What if the price shoot up and closes above? We don't know, right? We don't know. Okay. We have a lot of stuffs in mind. Yeah. So that is why I moved on to Malaysian SNR. Okay. Then Malaysian SNR, the precisions are extraordinary. Extraordinary. It's same like this. But the thing is, we don't need to break our head. Okay. Here, I can quickly break even. Yes, the same thing we can do it on Malaysian SNR. Why? Because I combine this strategy with Malaysian SNR. if you're trading plain Malaysian SNR, you can't break even quickly. You can't break even quickly. That's the first point. The second point is you will put big stop loss, 30 pips. Okay, 30 pips, right? 30 pips here. As 30 pips stop loss. What's the risk reward ratio? 1:7. Now, what is the actual ratio we have? 1.6 pips, 33. Yeah, look at the difference here. Now, if I combine this with both, like, with the Malaysian SNR and the ping pong, I can have a small stop loss with 100% precision. Okay, I can't say 100%. Let's, I didn't reach that level, but we have a win rate from, that has the range between 95 percentage to 97.6 from, from the statistics of what is this month, May, right? May, April. Okay, from April we have this, the average, yeah, of the win rate. Okay, so the thing is that if I combine this strategy with the Malaysian SNR, I can have precision where I can risk 1% or more than 1%. Okay, so basically the highest risk I made on one single trade is 6%. What is that? 6% per trade. So let's say I took this trade. This is a 12-hour trade. Okay, so if I took 6% risk per trade, what is my risk reward ratio? 6 into 12, 72.
22.
Yeah,
Yeah,
72.
it's a bit more.
Yeah. So if I risk
Mm,
6%, yeah, that is not risk advice, bro. I'm saying that is not risk advice. I don't suggest any one of you to take 6% risk per trade. Okay. That is a stupid thing that you can do yourself. Do it yourself. Okay. That's the easiest way to blow your entire account. Entire account. So never do it. Okay. You will risk this money with enough experience, with enough experience, with, if once you understand all the logic, it will take time. It will definitely going to take time, because it took 1 year for me to came to this level. Yeah, I didn't do this overnight. It took me more time. Yeah, and then I was testing this Malaysian SNR for 3 months. And I was working with ping pong for more than a year. Yeah. Before that, I was trading the basic algorithm, basic liquidity inducement theorem. Okay. Basic liquidity inducement theorem. And then I created my own using the time and price and all these stuffs. Okay. So now, again, coming back to Malaysian SNR, we're going to be only trading gold. Why gold? Why not Forex? In gold, we don't have any time restrictions. We don't have any time restrictions. We don't need to wait for London kill zone, New York kill zone, and all these stuffs. Keep this in mind. Okay, you don't have to take any notes. Just keep this in mind. Okay. And the second thing is, yeah, volatility. The volatile of the price is extremely higher. Okay. Let's say what is the lowest lot size? 0.01, right? Yeah. If you put the lowest lot size of 0.01, yeah, even if you catch that, let's say if you're entering here and you're casting all these here, you can easily make $100 with 0.01 pips. You can't do it on Forex. That's the second thing. And the third thing is you can take trades on every 4 hour candle. Every 4 hour candle. Understood? You can take trades. The important thing is you don't have any time restrictions. What do you mean by time restrictions? No Asian session. We even trade Asia. We even trade London, New York. We'll literally trade every time frames. Okay, every time sessions, time zones, all these stuffs. Okay, so that's why I'll trade gold. When it comes to Forex, there is time specifications, time specifics. What do you mean by that? The thing is that you can only able to trade specific times. New York open, New York kill zone, London kill zone, London open. That's it. 4 sessions, 4 session opening. That's it. You can't even trade at any time. You can't even trade it every 4 hour candle. Yeah, like that. So that's why I'm gonna stick with only with the gold. Okay. Okay. So now we are on the goal now. So how I'm gonna combine this to get the precision entry. Precision entry. Okay. So now I need to find the bias. Okay. I need to find the bias. Before that, before I'm gonna teaching you about the strategy that we're gonna be using. I'm gonna be introducing a new concept that was talking about on Instagram in my story. Yeah, I told you, right? A new concept was developed by Malaysian traders. recently, yeah, in 2023. Yeah. So that is the concept that I'm going to be talking about. Extremely powerful. Extremely powerful. Yeah. You know, the world most powerful traders, they are actually, they're hidden from the world. Yeah. They're not on social medias, they don't even post their photos, anything. But these peoples are extremely intelligent. Yeah. They can compete with the market makers. Yeah. So they have developed a new strategy, and I believe it was developed by Daira Almira. You know about the Daira, the gold digger? Anyone?
Yes, yes, I know, I know.
Yeah, who's
Yeah, they are the gold digger. Harry had.
Harry? Okay, Harry. Okay, Daira, the gold digger. Yeah, she
Yes, yes,
is
I've heard the name.
greatest trader in the history. Yeah.
Yeah.
Look
Yeah,
at her lot size. She used to have like 95 to 100 lot size. That was so
Yeah.
amazing, right? So amazing. Yeah. And the Malaysian
Gold.
traders, yeah. Go on, please. What is it?
Do you say 100 plus on gold?
Yeah, gold. Yeah, 100 lot size. Yeah.
Crazy,
How,
man.
what they will do basically do is they have a flip culture in Malaysia. In Malaysia, like they have the culture to flip their account. Let's say they have a 10 grand, a 10 grand account, or let's say 100K. They have a 100K account. Okay. So people have the culture to flip that account to 200 into 100% or 200%, 300%. So to flip this account in a very short period of time, what is the what is the way? They have to risk more, right? So people risk, like, 50% of their account in one single trade, like that. Yeah. But how do they able to risk all these money in one single trade? Yeah. People used to risk 30%, 25%, 20%, all these stuffs. How do they do it? Okay.
I
How
don't
do they
know.
do it?
Different
That's a
account.
question. Yeah. Because they have a trading plan that works all the time. Yeah. So they
Yeah.
have, if they took 10 trades, they will lose 20.